Alrighty guys, so today is the 24th of May 2017. Today's webinar is going to be entitled Fibonacci, the art of, what was it that I called it? The exact wording, I just want to make sure that I was saying it the right way. Okay, the art of balance, yeah. So basically, Fibonacci on a whole, a little breakdown about Fibonacci itself. It was invented, I think, in the 12th century or something, by a mathematician, an Italian mathematician. His name was Leonardo, and they nicknamed him Fibonacci, Leonardo Pisano, I think, right? And so it's obviously a mathematical equation basically, and you can Google Fibonacci and you'll find about Fibonacci itself, about what the meaning of Fibonacci itself means, which is a pretty interesting thing on a whole. It applies to a lot more things than obviously than trading, but we are here to discuss trading Fibonacci. And so for us, when we're talking about Fibonacci, when it comes to day trading or swing trading, it's basically the simplicity of what Fibonacci is really, is us trying to see where that balance is, where that chart needs to pull back in order to have a bigger move to the upside or a bigger move to the downside, depends obviously on which side you're playing it. So when you're dealing with Fibonacci itself, a lot of people, when they're trading, and a chart pulls back on them, especially a nice bull chart, like say this one here, say this TGI. The trade was for a short. Okay, the short on this trade wasn't necessarily for a flush, it was merely for the pullback. So this play on the short here would be a fib pullback for a projected move to the upside. So in order for this trade to really come into a fib type setup, what you'd be looking for ideally on this entire move is a really aggressive pullback to this 50% line. And so why would you be looking for a pullback off of this chart to 50%? Because it will balance out the trade. It helps the trade to settle. It helps the trade to reset indicators. It helps the trade to retrace enough to have another type of a move to the upside. Obviously, there are some trades that don't respect Fibonacci. There are some trades that, like one example for, if you're doing charts like low float charts, it's a difficult thing to really assess those, as far as like is there a proper area for a fib pullback. Some of them may line up where, hey, yeah, like you do get a 50%, you do get a projected move on some of those charts, but it's very difficult to base trades on lower float charts with Fibonacci. I feel like it's just really based off momentum on some of these charts, because on a Fibonacci, I feel like I like to trade Fibonacci's with stronger, more trending type of trades. Any trend trader, which is basically somebody that's looking for a trend, right? So if you're looking for a trend, may it be a chart that pushes to the upside, pulls back down, which would be about a 50% pullback, and then a move to the upside. Now, so this trend is an obvious uptrend, right? As the chart moves, it's an obvious uptrend. So this is a trend trader, right? So are you a trend trader? Of course you are. Everybody that trades, if you're trading in a certain direction, you're a trend trader. If you're trading for the upside and you want your chart to go higher, you are a trend trader. If you're trading a short and you're looking for the pops to short into, you're a trend trader. Does it mean when you see a lot of people talking about trend trading, and you feel that, hey, I'm not a trend trader because I'm not in the chart for that long to be a trend trader. So I'm not a trend trader because I don't swing it for months. I'm not a trend trader because I'm not playing it over the 200 SMA. If you're playing this and it's a 5-minute time frame, and your 5 minutes to go up is what you want it to do, every 10-15 minutes the chart makes a leg up, you're a trend trader. You're a 5-minute trend trader, but you're a trend trader. Now if I changed this entire time frame from 5 minutes to daily, now each one of these candles represent a daily candle movement. Is the same chart, same formation, it's still a trend trading. So you are a trend trader no matter how much you don't want to think that you are. You are a shorter trend trader as a day trader, or you're a longer trend trader as a swing trader. Either way, you're a trend trader. So when you are trading trends, you are looking for Fibonacci retracements. Now you may not call it Fibonacci retracements, you may call it pullbacks, you may call it retracements, you may call it consolidation, but in general what you're looking for in a chart that moves to the upside, settles down, you're looking for another move to the upside. Here's where the difference is when it comes to trading. Scalp traders, they're in here at for whatever reason they're in the chart here. Chart pops and they're out. Once the chart pulls back, they say, oh, it's done with, and so they're out of their trades on the way back down. A trend trader will try to get the chart to come back to 50% of this move to the upside. Let me draw it a little cleaner. A trend trader, a chart that goes like this, a trend trader wants to see this pullback because this is still a trending chart. A scalp trader, a shorter term trader, wants to get the move here. They do not want to play this move back to the downside. If you look at the formations that each of these little triangles make, you will kind of see what these things look like. And so every pullback forms a pattern that you know, that you're used to. They're called a flag. So here you are. Every time you see a trend, it should have flags inside of the trade. So each one of these pullback moves here causes a flag, causes a rounding bottom, okay? It causes a projected pullback, a high breakout. Every single chart, once it's making the move that it wants to make to the upside or downside, depends on if you're shorting it. Once it's making the move that you want, it should have all of these technical formations all in one. The objective when you're doing Fibonacci retracements, the objective is to find an area when your chart is trending to the upside. We're just going to project that everybody's long here, okay? When your chart is moving to the upside as a trend trader, you're looking for a proper retrace. So you're looking for a line between this area and this area that gets you to the move to the upside. Okay, so I cleared it by mistake there. Anyways, let's get into a couple charts and we can actually see some stuff at work. Now the thing is that, and I said this, I've always told you guys this, those of you guys that have heard me before, I've always told you guys about if I show you charts now, it is pure hindsight trading. The ultimate way to see things work, to see Fibonacci's work, to trust them, is to do it live. That's the only way to ultimately trust your skills as a trader, especially if you want to use Fibonacci as a useful tool for your trading. Everything that I show you from here on out, chart wise, is hindsight. Okay? Did they work? Are they going to work? Probably. But there's nothing more realistic than playing an actual chart with a Fibonacci retracement or projection and having it work right in front of you. And for those of you guys that have traded with me, you've seen me done these things many times where we do a projected move on a chart or something and it nails it, and it works, and it trades, trades come into money. Prime example of that is ALNY today. I took the short on ALNY right here. So there was a if you're looking at this chart right now, you'll say, well, there's quite a few reasons to take that on the short side. And if you just stare at the chart, I can show you quite a few reasons to take that chart on the short, right? You're coming right up to a top in, RG move, rejection there at the chart, trying to push into a green territory for the day. And so you can say, well, yeah, that's a good reason to be short right there. My main reason for the short on this chart was basically what I did on this was because I'm looking for it was basically an overnight trade. So for me, what I was looking for was I was looking for a retrace off of the big downside move, and this gave me a nice push to the upside. So once the trade pulled at the open and kind of formed a nice rounding bottom, I was looking for the upside retrace to take a short. Chart obviously didn't break down right away. It came back and double topped, and we shorted again. So we shorted here the first time. Now this may not seem like such a decent size move, but it actually was a nice play. I mean, it was nice enough for $665 the first time. And so this trade here was a decent move, and it came back to the double top, and then traders, we shorted it again into the afternoon, and this one actually had a nicer downside move to it. But I'm gonna show you, before we look at the reason for the push up, we have to see, well, where should the chart push down to? How much lower can the chart go? So we do a pin. We do a pin from yesterday's high to pre-market lows, and we're going to get a projected short move down to the downside here. And so whenever you do fibs, you obviously see the numbers on the side. You'll see the prices on the side, depends on which platform you're using. And you'll see the Fibonacci numbers. So let's go into the Fibonacci numbers a little bit. However you color coordinate them, or because I can change the colors of my fibs, right? The lines. Mine's are pretty straight on. I like to use my 100% as the red line, my 50% as the red line, my 32 and my 61% as the blue lines, and I rarely ever use the 23%, but it's just there and it just stays there, and I rarely use the 127. For me, what I'm looking for on fibs, honestly speaking, I am actually only really mainly focused on the 50% line. I'm really only concerned with 50% pullback. Do the charts give good reaction at 61.8? It really does. But for me, I'm a type of trader that all I want to see is a decent pullback. And a decent pullback for me is 50%. And so when I'm looking for a Fibonacci retracement, when I'm looking for a chart to consolidate, to give back, to pull back, I want to see 50%. And that's kind of the numbers that I'm going for, and I just kind of eyeball it sometimes. And a lot of times I'll pull up the actual Fibonacci table here for the traders that are learning, or while I'm teaching. I'll do it with the actual Fibonacci table. But in my case, I guess I can explain to you how I started doing Fibonacci's and how I actually got into Fibonacci's. Well, a long time ago, when I started trading, I never read a trading book. I never was taught by anybody, and I kind of learned a lot of things on my own. And so for me, when I was learning stuff, I think it's one of my biggest advantage, the way that I trade now and the way that I see trades, is because I was never jaded by anybody else. I was never held to anybody else's standards. I was never led down anybody else's trading paths. And I feel like for me that helped me to escape the one one-side-minded type of thinking about trading. Like say for example, you were taught by, not taught by, but you followed, or you you and associated yourself with a long bias trader. Everything for you, as the way that you see it, after a while becomes only long. Your eyes only see long. Your mentality only wants to be long. Every chart that you see pulling back, you say, "Oh, it's a bad trade. It's not a good trade. It's not a working trade," because your eyes have been conditioned to only see long. So for me, when I started, I wasn't conditioned by anybody. I wasn't jaded by anybody else's reactions to things. Sell offs were just sell offs. Long positions were just long positions. And when I started to see things as a trader, what I did at the beginning, I only looked at daily charts. All daily charts. All daily charts. Because I wasn't interested in intraday moves. I wasn't really much into the day trading. I was I was kind of actually looking for trending trades. So all I did over and over and over was I scanned through daily charts of different things. And I started realizing there are certain things on certain charts, on most charts, that when after a big move, right? After a big move, every chart usually had a few downside days. And so I started to make myself a pattern where I would say, okay, maybe it's 10 days, maybe it's 15 days. And I would literally count each candle, and I'd write them down, the numbers that have days that I was seeing, because I didn't know there was an actual mathematical way. So I would say, okay, well, TIFF, here's the push to the upside, and let's count how many days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Let's just call it 15 days, and then the chart started to move. So I'd take a chart like this, and then I'd look for every push, and then I'd count the days. And I'd look for every push, and I'd count the days. Look for every push, and I'd count the days. And so for me, when I started doing Fibonacci, what I know is to be Fibonacci now, when I started doing it, for me was a mathematical thing. It was a matter of how many, what's the range, what's the median, what's the average of days that a chart needed to consolidate after a move in order to have another move to the upside. But there was a bigger thing at play here, obviously, and that was Fibonacci. So I didn't really know much about Fibonacci. I didn't know anything about it. I didn't know how to use any of these things on the side, so I never understood what it was. When I did click on Fibonacci and I did that, I said, what the hell was that? I didn't understand what to do with it. There was no, for me, there was really, I clicked on it, I moved it around, and I just couldn't figure out how to work it, like what's the reasoning for it. So after a while of doing what I did, and I clicked on these things a couple times, and I just kind of washed them away. I didn't really care to use them because I didn't understand it. So I kept doing what I was doing basically, which was whenever a chart moved to the upside or the downside, I'm looking for a certain amount of pullback on it before I took it on a long side. Some charts I realized that there were 10 days, some charts I realized was 15, some charts was just 2 or 3 candles to the downside, and so certain charts had a certain amount of pullback, retrace, or for me, in my case, days of downside after an aggressive move in order to continue the move. So in basically, what I realized that every chart, if I was being a bull, because I didn't know about shorting, every chart did something like this, which is Fibonacci. So every chart after a move had some sort of a pullback, and every chart continued to move higher as the pullbacks came into play. So that's Fibonacci. And that's exactly what I learned without actually using Fibonacci. Now, once I was introduced to the actual Fibonacci, it just made so much more sense. It became so much easier to find moves. But what became better and easier was to get projected moves. So for me, it wasn't much about using Fibonacci for my pullbacks. It was more so using Fibonacci for projected moves, for upside projections. So now I don't know how much of Fibonacci you guys actually know, but if you want me to go into the basics of the numbers a little bit more, let me know. But let's throw this Fibonacci number up here. Let's just throw it. Damn it. Okay, let's move that. I wish I could get a blank space. I probably could. Okay, here's a blank space. So without any charts or anything on here, let's just do the actual Fibonacci. Okay. So what I did was basically 100% is where you start from. Okay, when I click on that level, let me get my little arrow here. 100% represents where I start from. That's a pivot point. So Fibonacci is basically used from one pivot point to another pivot point. So the pivot point to the top side, and then this bottom area here is the other pivot point. So this would basically signify, well, here is my move to the upside. This chart went from this area to this area. So what I want to see now on a chart is I want to see the pullback from this area to my red line. And you guys remember the red line is always my 50%. So on this move up here, which is one pivot point to the other pivot point, I want to see a retrace down to 50% off of this move. So this table helps me to understand where is the 50%. 50% is right at the red line. Now, if the red line is to hold, it means a couple things. It means a few things. As a trader for you, it means a lot of things. It means that your chart should project. Project means that your chart should go up. If your chart breaks the 50% line, for me it's never usually a good sign. I never want to aggressively trade it if it pulls under the 50%. Can it pull down to the next line? Sure. Can it pull down to the next line? Sure. After a certain point on a pullback, it is no longer a pullback. A proper pullback should be about 50%. A balance, a scale, up and down, a balance situation. It's a pullback. It's a retrace. Anything bigger than that, it's a sell-off. Now that's a different thing. You never want to long into a sell-off. You want to long into a pullback, but you never want to long into a sell-off. So a pullback. This is your pivot. This is your pivot, right? This is your pullback to the red line. Once your chart can hover above the red line, you can distinguish now that yes, my chart is holding, and I project it now to get up to the 161%. So now your target becomes this area. So as a trader, how do you trade this? You take the trade, you let it work. During this trade, somewhere you sell half of it, some of it. As the chart comes to the top, whichever way the chart can be, this could have been obviously higher up, right? Your chart could have gone more or gone less or whatever. When you put your fib on it, on that line, when you put your fib from that move, the entire move, you want to see where the 50% retrace is. If your chart comes in and holds the 50% area, hovers around there and starts to curl, forms a rounding bottom like I showed you before. Once it forms a rounding bottom, this is your add spot. Now this is where a lot of traders get themselves into trouble. The thing is that when your trade pulls back, a lot of traders, instead of respecting the trend, is your trend an uptrend? Yes. An uptrend should have a pullback. This is your racer. He's running. He needs to take a breath in order to sprint again. So once you start your race, you have to breathe in order to continue. And so with the problem is a lot of traders take money off, which is good. Once the chart starts coming down, they dump it. They dump it because they're thinking now the chart's done. without understanding how much of the chart technically should pull back, they're all out of the trade. Here, right here, sometimes probably right at the 50% line. Then the chart starts moving up and they're complaining that they didn't hold the trade long enough. For a technical trader, trade moves to the upside, pulls back 50%, this is where you add. This is where you trust your trade. This is where you trust your fibs. This is where you trust your knowledge as a technical trader, and you add into your position here for a move towards the top. So what do you do when you do an add here? You took a trade, you sold some of it, you held some of it, chart pulled back to 50%, you added into the trade here. So do you wait to sell here? And that's the biggest mistake a lot of traders make. Because the chart fibbed and projected a move for you up here, that's not where you want to be looking to sell all of your position. Where you ideally want to be looking to sell some of your position is right into this range, right at that possible double top. You see, this chart could have come right up to that double top, and instead of breaking out to the upside, could have done one of this and formed a perfect double top and failed. So what you want to do as a trader is, as your chart's working, you're in, you sold some, you held some, chart pulled back 50%, you added. You want to sell some right about there, right before the potential double top is hit. So initially what you're doing is you're taking money from here, you're adding it here, and you're taking off some of this chart here. So say you did 500 shares, you sold 250 along the way, you added back 250, you have 500 shares again, then you sell half of it again, and here's where you ride the rest. Now, as a technical trader, this is a great area to be looking at. Why? Because if the chart never double tops, if it doesn't do that double top, and it breaks through the high, it should retest that high, and that's going to give you a full size add. So say you have 250 shares here. This is where you can make a lot of money in trading. 500 shares here to start the trade. You sold 250 shares, okay? Now you sold 250 shares there. Came back, you formed a round and bottom, nice little cup and handle setup or whatever, 50% retrace. You added back 250, okay? You came back at the top here and you sold 250. This is just one trade, okay? When the chart breaks over the highs, it's going to formulate an entire new setup, a high breakout. This is where, as a trader, you can take your 250 and you can add 750 to it, and you can make some serious coin. There's a certain parts of a trade that you have to be able to take in or out of the trade incrementally. There are certain parts of a trade when you have to know where to hit it. And so on a trade that starts off at 500 shares, you take off 250, you wait for the pullback, you add 250, you sell 250 at the possible double top. When the chart breaks over the highs, it's a point of the chart for you to hit it. And that's where you come in with size. Because that's the point where you go from making, a couple $100 down here into this range while you formulate a trade. You're making a couple $100 here. But this is where you can take your trade from a couple $100 to a couple $1,000. Because at this point, this is where the bigger money comes in. So as a trader, you want to start off smaller, take your paycheck. Your only thing that's going to actually make you, any kind of money is a paycheck. You need to be making a paycheck. Your paycheck will do a lot of things for you. Your paycheck will take your account and grow it. It's the only thing that can consistently grow your account is to take a paycheck. And so along the way, while you're taking your paycheck, that's the money that's going to promote growth to your account. Everything else on the top of your paycheck, this entire section of this trade here, is your bonus. This is your big money. So whatever your paycheck was these two trades, they added up to $200, that's your paycheck. When you have 1,000 shares and your chart goes up a point, that's your bonus money. That's how you take your small account, you add $200 into it on an average day, just in case the chart never moved, just in case it never broke out, just in case it failed, stopped you out. You still take home a paycheck. You still add to that account. But what significantly makes a difference is that right there. If you can add that $1,000 on top. And so that's the part where, as a scalp trader, you go from here to here. Okay, you're happy with this trade. As a trend trader, you go from here to here. By getting into the trade, selling some of it, adding where you need to, and extracting the utmost amount of money that you could from the single trade. So this is the difference here between a shorter term trader, and this is the difference here with a proper technical trader. An add, a retrace, a size. And so you can go from doing this to doing this, as long as you can manage the trade properly and utilize those pullbacks and utilize the way that the charts are supposed to be. So that's your Fibonacci thing there, and those were the numbers, right? So let's just go into a few charts. Let's see, Jeff, what points would you use fib to day trade? Okay, day trade fibs are pretty. They're sometimes a little bit more complicated because it's a faster intraday move, right? And you've seen me done this a million times with day trade. Let's just bring up XIV for example, and let's see what kind of day trade fib we can get. Okay, I use 5-minute candles. If I use a 5-minute chart, then my fibs have to be in 5-minute formations. If I use a 15-minute formation, a time frame, then my Fibonacci work, my projections, my pullbacks, everything associated with that trade has to be in that time frame. I can't do a 5-minute Fibonacci and expect it to work for a 15-minute overlay. I can't do a daily time frame and expect it to work for an intraday trade. So everything obviously has to coordinate with each other. So I'm using a 5-minute here, okay, Jeff? So in a simple thing like this, I bring up my Fibonacci tool. I see XIV pushed to the top. So that's a pivot, right? That's designated as a pivot point here, where the chart made that high. And I would call this a pivot point here, where the chart actually reversed, right? So now what we're going to do is we're going to see where that chart should project us to go higher. If your chart is curling to the upside, you're projecting higher, not lower. Okay? So as we come down to the bottom, you see my bottom line is at the bottom wick, right down here, Jeff. So I go from my top line, which is my 100%, to the down line, which is my 0%. Now my fib move to the upside and my projected move to the upside puts me right here. So right at this next pivot. And you can see that candle actually came to the penny at that pivot line and then pulled back. Now, so when your chart pulls back here, as a fib trader, a trend trader, do you say that the chart's dead because it's all the way up here? It hit your top side projected? No. What you would have done on this entire trade as it formulated itself is, if you got into the trade on the curl, say you missed it or whatever, okay? Say the chart broke over the 50% line and held over the 50% line. Chart is now in strength. It's no longer getting rejected and doing this. It's actually holding for strength at the 50%. So what I'm looking here for is, say I get an entry here. What I want to do is sell some of my chart right here, right before it comes over the line. You can see that the chart came up to that line, reversed. I'm going to show you guys something a little crazy. You're going to have to stick with me a little bit, okay? From the part that the trade moved to the upside. Gosh. This is called a fib within a fib, and it gets a little bit complicated, and there is no real wording for this. This is a pure Iceman craziness right here. It's a fib within a fib. It's like a Russian nesting doll or egg or whatever that thing is. It's basically a fib move and then a fib move inside of the fib move, which is here. So what I'm looking for is, this is my 50%. I'm looking for a 50% pullback off this 50% pullback, and then for a move to the upside. So I know that sounds complicated, but it isn't as complicated as it sounds. If the chart was to move and hold my line here, okay? If the chart comes and reclaims that zone right there. So I'll edit that. Let's make it a little brighter so we can see it, and a little bit bigger so we can make sure we know where it is. Okay. This is my entry at this red signal line. Now, if this is my entry at the red signal line, then what I'm looking for is a fib within a fib. I'm looking for a pullback. So if my chart pushes up here and I see the wick at the top, I'm looking for a pullback. And my add spot is here, right into this range. So as long as the chart starts holding this range, as long as it starts reclaiming this 50% line, I add. Take off some more here. Chart breaks over, monster add, projected fib puts me over here. That's your money right there. So this is a good example of what I just showed to you guys in that little drawing. So this is my entry. Why is it my entry? Well, it's a long entry because the chart, when you fib this move from this pivot point to this pivot point, on a good short entry, this chart's supposed to get rejected at that red line. Supposed to get rejected hard at that red line. Instead, what the chart did was it pulled back. And basically, if you look at this pivot from here to here, you can see about a 50% eyeball this, and you can kind of see about a 50% move, right? Eyeball this entire setup from here to here, and you can see about a 50% retrace. Chart is in session. It's stronger because it's not breaking down. In fact, it's pulling back to give you a long move. So as far as Fibonacci goes, as far as pullbacks goes, retracement goes, structured trend trading goes, this is a structured pullback. This is something that you want to play into. So a chart pulls back here and starts moving. So my entry is above the 50%. So why is it above the 50? Because the chart is no longer getting rejected at the 50. In fact, it's actually holding the 50%. When a chart holds the 50% for me on a fib, what's supposed to be a short trade, when it holds the 50%, I want to be long. I'm no longer short biased on it because it's not getting rejected at that 50%, but in fact it's actually making a support at the 50%. So my long entry here, my move to the upside, my profit because of the double top scenario, my measured pulled back move for another add scenario. Take something off, break over to the top, monster size, money in the bank. So that would be a small projected move on XIV. So let's do another chart like okay, let's do Nugget. I tend to have a few go-to names, so you can clearly see that I'll be doing a lot of go-to names. Okay, here's a good one. All right, the chart. Forget this little move here. Chart had a downside move, pushed up, and started getting rejected. Okay? So what do I want to do on the rejection? Well, I want to see if I missed all of this, right? If I'm only seeing this little piece of the move, how much of this rejection can I go for? If I short this chart, what can I expect to obtain from the short side? So I'll put a line at the bottom here. I'll start my Fibonacci tool there, and I'll bring it up to where that top side wick is, right there. Okay, so my both wicks here are, this is the move, this is the rejection. How much can I project to make on this chart? So off this move, off the possible short, I want to see what can I make. How much can it go down? So off of this short, I expect it to at least come down to $32.50. So from this $33.50, say I see it start making a downside move already. So I take a short position on it, right? When the chart breaks the lows, I add into it. So here I am. short position. I take some of it off at the possibility of the chart making a W, a double bottom scenario, and pushing back to the upside. I take some of my trade off here. As the chart tries to reclaim the zone, which it tried to do here, and failed, this is my full size add. So if I had 500 shares, 250 of it off, chart reclaimed, tried to at least, failed the reclaim with a strong red Maribozu candle, full size add. I'll probably do, if I had 250 left, I'd probably do 750 add, because this is my move to the downside. This is where I would cover about 90% of my trade, because I know that I'm only projecting to get down to 3250. So into this 3250, I'm covering up about 90% of my trade, and I'll hold the remainder of it. And I would probably not even cover up here, and I'd probably get stopped back out on the way up, because when I usually leave a piece on the trade, it's literally for me to get something or stop it out. It's not really for me to make money at that point. This is where your money's at here. This is where you structure the trade. This is where you get your paycheck from here to here. This is where you make money, right here. So it's the part of the trade that a lot of people leave behind. Part of the trade that people usually say, oh man, I left so much on the table there. It's a part of the trade where people usually are afraid of staying into. The most stressful part of the trade, the best part of the trade, it's like that fruit at the top of the tree, the best one. That's the part that nobody wants to work for. That's the part that nobody wants to stay in for, that exuberant push, that projection move, that yes, I did it. Yes, I stayed into it. That's the part that a lot of people are fearful of staying into. A lot of times people would get out right here. So why would people get out of this trade right here? Well, okay, here we are at the double bottom. Oh, 1, 2 strong green candles coming up here. I'm out of the trade, because now you feel like it's reversing. But in actuality, did you really have to run away from that trade? Of course not. Here's the same candle situation, right? I'll just circle it so you can kind of see exactly what I'm seeing. So this is where you covered up some of your shares. Here's the chart bumping up. 1, 2 candle. Where would you have your stop? If I'm on a 5-minute time frame, as long as it remains an inside candle, I don't care how long it wants to stay inside. It can go up and down, up and down, up and down, up and down. I won't cover it. If it breaks over this wick, I'll cover it. Right there. If it breaks over that wick, I'll cover it. So why, if it breaks over that wick, I'll cover it? Because then it won't be an inside candle anymore. It'll be obviously a breakout candle, a reversal candle. As long as it stays under that candle, it can bump around for all the time that it wants. So this is an inside candle. It did not break the top. That's where your stops would be. So you would not get stopped out, and this chart could have bumped around here for the entire rest of the afternoon. As long as it remains underneath that line, it should keep you in the trade long enough to see the thing break to the downside. And so remember also obviously where your stops should be. Okay, so being that this is a Fibonacci webinar, let me try to stay focused a little bit. Let's look at FSLR. This was a nice chart, but what I wanna show on FSLR is basically a projection. So I don't want you to see the upside move today. What caused this upside move today? Something happened to cause this upside move today. Could have been yesterday's move. Okay. Yesterday's move came off strong. Here is your obvious pin. Here is the other pin. So Jeff, you were asking me about pins before, and which ones do I use? I usually just use the top and bottoms, honestly. If I'm trying to get a projection move, I'm using top and bottoms. I'm using the top tick and the bottom tick. So I'll throw my tool on that one from the top here to the bottom. And here we are right at the top of where that move pushed into today. So this push yesterday with a Fibonacci pullback gave me a projection right up to here. And you can see right where the chart came up to before it started to curl back to the downside. Once the chart curled back to the downside, from this move to this move, you would have gotten yourself another projection to the upside. Another, hey, if this chart curls, how much can I extract from it? And that's going to be right there. And so, did it go more? Well, that would be where your extra stays in. That's why I always leave something behind to try to capture something that gives me more than the projected move. So, in a trade like this, what could you have seen from yesterday that gives you a move into today? And this pullback on FSLR yesterday would have given you a projected move on it today. So let's try to see if there's a chart out there that can probably give you a continuation move tomorrow based on the Fibonacci work today. So on PBYI, we know when the chart unhalted, it popped to that level. We know that it pulled down to that wick. Top and bottom wicks here, that's pretty simple to establish. Not really that one, top, bottom, right there, okay? So that's the entire move. We understand that the chart came into it, reclaimed the 50%, pulled back into it, reclaimed it again. Chart strong now. Once it's reclaimed the 50%, you have a strong chart, a long trade into that trend. Projected move on PBYI should be hitting that area tomorrow. You should be able to see this number tomorrow, which is $80.35. Eventually, when the chart gets up to that area, it will also provide you with a short opportunity on PBYI at that range. Off this projected pullback and the move to the upside, you should expect to see $80.35 on PBYI tomorrow. How the chart decides to do that, if it pulls back, if we get some sort of news or something on it, obviously if there's a catalyst that destroys the chart, that's different. Other than that, you should expect the projected upside move to sometime hit the day at $80.35. The thing is that when you wake up in the morning, there are a lot of traders that see things differently. They don't see the bigger picture upside, and some people may want to take profits if the chart doesn't gap up in the morning. If they held overnight looking for that morning gap up, they may not get that gap up and they may sell right at the open, causing the chart to pull back down. So the easiest way to play that, if the chart was to pull back, if the chart got aggressive, the same things apply. How much of the chart should be pulling back? If this is the strength, then this is my weakness here. A fib within a fib to get you a retrace area at $72.75. If your chart hits $72.75, which is a fib within a fib, then you should still see that overall projected fib move at $80.35. So I know that may have just like, whoa, what the hell was that about? But if you're doing a fib move to get yourself a long area, your long area comes right here. I'll put my arrow. Your long area comes at the red line, right? Your red line now becomes the bottom fib, becomes the bottom line. So if you use the top line, which is still the top line, now you're using the arrow as your bottom line. Now this is your fib chart in between here. So you're looking for a projected pullback on the chart, and if it was to happen, it comes right there at 72.75, which gives you the fib within a fib play, which is a very complicated thing that I've seen work a lot of times. And I know that Eric, I kind of blew Eric's mind one day because he said that he uses the same thing, and I guess as traders, you kind of pick up on different things that can help you during, while you trade or while you learn different things. And that's something that I've kind of noticed, that even within a bigger move to the upside, there's a ton of smaller moves inside of it, structured moves, structured pullback setups that allow this chart to give you an opportunity to buy. Every time that a chart pushes, you should expect a pullback. Don't consider it so much as a sell-off. Sometimes consider that pullback. Let the chart pull back. Allow the chart to relax. Allow the indicators to reset. In order for the charts to move higher, the indicators need to reset. As much as if you don't even believe in indicators, you don't even believe in moving averages or projections or fibs or whatever have you, in order for anything to continue moving in the direction that it's moving in, it needs to rest. So forget the entire chart setup. Forget trading. Forget all of this stuff, okay? If you're a runner, okay, and I've brought this up many times. I have a horrible runner here. If he's taking a sprint up a hill, he cannot continue going forever. In between his run, he has to take a breath, and that's where you get your fib plays, okay? Because he needs to relax a little bit. He needs to take a break. So on the move to the upside, there has to be a consolidation area, a rest area, and then another move to the upside, and then another rest area, and then another move to the upside. There has to be an area of rest on the chart, and that's where your consolidation comes in. That's where all chart patterns are formed from. How do you make flags? How do you make trends? How do you make rounding bottoms, double tops, breakout formations, ascending wedges, descending wedges? How do you make all of these formations as a trader? It all has to do with a measured pullback move. Everything about any formation out there, it can be a wedge, it can be a top, it can be a parallel, it can be any type of move out there. It has to do with a measured pullback move and then a projected move. Any trade that you want to take, if you're taking it at X, you need to see where Y and Z ends up. Because how do you know where you want to try to exit the trade? How do you know where you want to see yourself being? So let's look at something else. Let's look at JDST. Okay. On this chart, let's make it simple. Is this a short today? Yeah. That's a short. My chart pushed up to the upside. Well, okay, let's do the simple thing. How much on the upside can I get? Well, easy. Pull it back to the fib. There's my 161%, $85.10. Money in. Okay, trade's done to the upside. My chart's starting to pull to the downside. How far can I get to the downside? How much can I see my chart move into the downside? Well, as soon as this chart starts to work, this is still my uptrend here, right? Soon as my chart starts to work, as soon as I see that this trend here to the upside is broken, right at this point, from that long, you got your long trade, that's done with, right? Money's in the bank. When the chart breaks the uptrend to the downside, it no longer becomes a long trade. If the reason for staying in a direction is broken, if the reason for staying long on a chart is voided, then you have to open your mind to think the opposite way. This long trade on JDST has broken a trend to the downside. It now becomes a short. You have defined it as being a short, so let's see how much money we can make on it. If this is the bottom of that play and that's the top of that play, then here's my short. Fibs, right down to the bottom, right there. 161.8% leads me to $74.65 to the bottom. Today's lows was $74.41, right down to the bottom. So as I've defined a trade that changed from a long trade, I'll go over it again in case anybody missed it. As the trade is trending to the upside, I want to be long. I want to be long because the trade's charting to the upside. So what do? Is I pull a pullback fib and I get a projected move to the upside. Once I've seen that my upside is up, I'm out 90% of the trade, just as we spoke about before about sizing in or whatever, right? I'm out 90% of the trade, leaving 10% of the trade to see if it works. Where would my stop be? Well, if I'm using this trend as an uptrend, okay, JC? If I'm using this pivot, this pivot, this pivot, this pivot, my chart's holding an uptrend, obviously, right? Once my uptrend is broken here, that's my short entry. Once my long is negated, if I keep walking up the steps and then the steps stop and start turning to the downside, then I'm no longer walking up, but I'm walking down. Here's my short entry, because the chart no longer is going up, but instead it starts going down. So my reasoning for wanting to be long is negated. Now my reasoning for short has been approached. So I take the short position. I take the short position here. Why? What's my reasoning for taking the short position? Well, my reasoning is simple. I can no longer be long on this chart because it no longer wants to be long. It's telling me that I'm giving up. I'm breaking. I'm coming to the downside. I take my short position here. Here's my risk, right to the high. If the chart was to curl and break over that high, then I would have to say, well, you are no longer going down because now you're breaking over highs. I need to be out of the trade. I need to no longer be in the trade for the reason that I took the chart in the first place. So I took the chart on the short side, JC. You see the reason why, right? Took the chart on the short side with a stop at the top. Now that I've decided that I am now short on this trade, I have to figure out where on this chart do I want to make the most money. So I put that projection on it to the downside because it's a short now. So I want to project a downside move. I want to see how much money can I extract from this trade. So my reasoning for being long is gone. My reasoning for being short is on top. I'm short. Stops here. Let's work with it. You can obviously see, I mean, if that's not being seen, you can obviously see that 161% got hit on directly. Okay, so that fib projection to the downside would have been on point on the short side. How do you formulate this trade? How do you maximize your gain on this trade? Well, what do you know? What do you know? I know that that's my top. That's a given, right? So let's break that up. I know that line is my top. Let's duplicate this. I know that this line here is my bottom. Where is it my bottom? Well, that's the low of the day. Okay? I know when I take a short position here that this chart is going to try to reclaim. Where did it try to reclaim? Well, it did. It pulled through and it tried to reclaim. So I knew this was going to happen. That's fine. Now what shakes me out of this trade? What gets me out of this trade? If you do a fib from here to here, okay, from the top line to the bottom line, you would see, eyeballing wise, that this chart got rejected about 50%. It got rejected about 50%. And so once it gets rejected about 50% and the chart starts making its way back down here. So here's your entry. Here's your entry. 250 shares. Here, let's start off with 5. Okay, we kind of always start off with 5, so let's start off with 5. Make it round numbers. It's kind of easier to talk to you guys about it. Here's your exit for 250 shares. You let it stay in long enough to see that you're right. Stops at entry if you want to maximize the gain. Once you take money off, stops at entry if you want to go for the gold. Once you see that the chart has formed a round and top, which is about a 50% move from here to here, by the way, I'm eyeballing it. Chart starts moving to the downside. It breaks the downside here. It shows you now that there is a continuation down. This is your full size ad here, 750. So now you have 1,000 shares altogether, and you jump on your fib from here to here. You get a projected move. Now you have 1,000 shares, and 78.20 was your add. Chart projection down to 74.67, almost 2 points to the downside. Your average is somewhere in the middle over here. The average is probably right about here, and you get a nice 2-point short on a full size add. So the move from here to here is your paycheck. The move from here to here is your account builder. And so that's the way to formulate that. Now, can we use fib for ideal spot on entry, not only on exits? Of course. Of course. If I'm giving you a projected fib move on that, can you take the short? Yep. Yep. If that's the maximum that chart should go as per fibs, and that it's not just this chart, it'll apply to a lot of other charts. If that's the maximum that it should go, yes, you should be exiting, right? You should be turning it around. If that's the maximum that I say I can go, if my odometer says I can only do 160, then I do 160 and that's it, right? If my fib turns out to be that's my maximum that I can go, then that's the maximum I can go. Anything more than that, well, it's okay to take a loss on something like that if it goes further out. But the benefit of you trying and trusting those fibs is what's going to make you a different trader from the rest of the guys. The people that you see charts that are they're extreme to the upside, they're pushing, they're strong, they want to go. Ask people today on PBYI if on that first pop, anybody that was in my group today, if we didn't nail the hell out of a short on PBYI today at the first pop. The pullback was a little excessive. We didn't expect it to pull back this much. The chart obviously came back up, but the short side on PBYI at the unhole was great. If Willow was here, he'd tell you, because I think he did points on that. But as far as trusting your fibs, you got to learn to do that, because they will really change the way that you see a lot of charts. They'll help you to expand on understanding the parameters of your trades, the entries that you want to seek out, the exits that you're looking for. Having a fib on your chart really can give you that extra encouragement to stay into the trade long enough to make it work, to see it work, even when the charts pull back and you feel like that fear is stepping in and you want to jump out of it. Understand that if your fibs are still staying in, if your chart is still slowly grinding to the upside with small measured pullbacks, it's still healthy. And that's all you want, that's all you need your charts to be. You just need them to stay healthy. Once your charts have showed you that you are no longer healthy, that you are no longer doing what you needed to do. If my uptrend is broken, if I'm trading a chart and it's going like this, it's pretty healthy, we're going up, right? Here's my uptrend. Once my chart breaks this uptrend, tries to reclaim the uptrend and gets rejected, that's short. That's me saying I am no longer going in the direction that you want to trade it. This is where a lot of traders lose a lot of money. Oh, it's gonna pull back. Oh, it's gonna pull back. Oh, it's gotta pull back now. I'm just gonna add. I'm gonna double up. Oh, what? Daily double bottom? Oh, I'm full sizing. This is what happens when you don't respect your trades or your charts. If your chart tells you for a clean fact, don't be in this trade in that direction, try to listen to it, because this is where a lot of traders lose a lot of money. You take a trade, it's working for you. It probably flashed red, flashed green, flashed red, flashed green, so you've seen this enough. Your mind is now conditioned to see the reds and greens. Your mind is conditioned to see the little red and then go back green. see the little red, and then go back green. Patterns have been presented in your head. Your mind now is structured to think that every time it goes red, it goes back green. Every time it goes red, it goes back green. Your mind now have built a pattern in itself. And so allowing the charts now, it goes red, it goes back green, it goes red, it goes back green. It goes red. It doesn't go back green right away. Your mind is still conditioned to think that it goes back green, because that's the pattern that you've built in your head. It doesn't go back green. Instead, it starts going more and more red. You don't have fear yet, because you're still in that position where you feel like it must go back green, because it's done it 4 times before. When it does start going red, seriously red, at that point, you know that your trend is broken. Sometimes you don't see the trend though. If you have your little P&L box up here, right? Sometimes that's the problem right there. You watch that thing all day long and that's your problem right there. Because you're no longer looking at the chart. You're looking at this. 100 down. Oh, what? 200 down. Oh, what? 300 down. 500 down. Okay, I'm taking a loss. I'm out. Lost $500. But where were you supposed to be looking in the first place? A lot of people look in here. Right? You're trading off of this when you should be trading off of this. So you got to figure that out. You got to either you eliminate this or put it up on the side sometimes and minimize the hell out of it. You don't need to see that. What you need to be seeing is this, not this. Not how much money you're up. Well, I mean, you should know how much money you're down roughly. But the chart would let you know when you should be out. The chart would tell you you should no longer be long, because I don't want to be long anymore. Stop forcing me to be long. Stop telling me I need to be long. I'm not long anymore. I'm going to show you I'm not long anymore by retesting that trend line and getting rejected. I'm going to show you that I'm not long anymore by breaking that bottom pivot. I'm going to show you I'm not long anymore because after this entire move, and this is my 50%, and I'm not curling back to the upside, instead I'm breaking through it, I'm going to show you I'm not long anymore. Here's your exits. Your chart's giving you a first sign. Number 1, get out. Here. Number 2, better chance to get out. Here. Number 3, get out. Here. Number 4, 50% line. Get out. Here. Where do you get out? Here. 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 When it starts to curl. Then you see it do whatever. Max pain right here. That is max pain right there. That's where most traders lose all their money. That right there is called max pain. That's max pain. Your chart gave you 4 reasons to get out of the trade on the long side before you can obviously get to your max loss for the day, before you see the max pain, before you have broken yourself as a trader, before you've mentally broken yourself, before you've taken away everything that you've learned. Before you get to this point where you don't feel like this is something that you can do for a living, where every trade goes bad. Before that point happens, the trade spoke to you 4 times. So it's when you start listening to the charts that you're gonna have the results that you want. The same thing with when it goes to fibs. When you start listening to them, when you start adjusting your charts to them, when you start trading them the way that you need to trade them, when they pull back, do you add? When they have the move and they retrace the 50%, do you trust it? And so as you can try to put more trust into your fibs, which is the simplicity of a pullback, when you can trust your charts more, it's gonna be better off for you. You're gonna be able to understand how the whole thing works. Okay, so TTWO. Let's look at a 2-day chart on this. We had a big move to the upside. My chart took a breath to the downside. That was yesterday's move. Today's move is the projection off of yesterday's move. Here we are. Yesterday's move, pullback, 50% held, that's my entry. Break over the high, that's my monster ad. Projected move, $80.15. The day's not done yet, we can still see that tomorrow. So your chart gave you the move, pulled back off of the move, and gave you a projected upside target. And here we are. Now it looks very simple, of course, because it's hindsight. And I've said this before when I started doing this. Every time I do this and this is after hours, there's no charts that are working. Every time I do this is hindsight. But I've done this many times before. Live trading. Live projected. ALNY was perfection today. When I took ALNY on the short side, members took it with me. But there was a lot of hesitation on why. Chart was obviously over the 50 EMA. I took this chart short into strong green candles, into a breakout spot, into green candles coming in, into a test for a breakout over high. I took this chart into strength on the short side, and it paid. And so I trusted my fibs. I said I am short on ALNY, and I think my entry was 71.05 for my first piece. And then I ended up adding into the chart as it started to break down here. I think once the chart broke the 50, I think is where I added, or I can't remember if I added above. Either way, I was short 1,000 shares on it. And so when I took the short, I trusted something else. I didn't wait for the chart to start going down. I didn't chase. I added. So what I did was I just trusted the fibs. Here's my fib. That's my short. Let's see what happens next. You show me what you're made of. Because I'm showing you that I trust the work. I trust the strategy. I trust my technical analysis. You show me now what you're made of. And obviously the chart showed that we were right. And we made money on a chart out of nowhere, taking a short position. On a regular day, if you're just looking at that chart, you're not looking at projections, you're not looking at fibs, you're not looking at anything. Strong green candles like that, you're not thinking short. But I shorted it, and I still made money off of it. And so that's the difference right there with understanding where those numbers are at, where the fibs are at, but also to utilize it as a tool. Now, utilizing as a tool, you can say, well, yeah, I'll do it. But do you actually do it? That's the big difference. You have to be able to say, well, yes, when a flag presents itself and it breaks to the upside, I will take it long. When a fib presents itself in a serious strong chart and it seems like it wants to go and buy a text breaking out new high of day, why do you want to short it? Well, because that number is there, and I trust that number, and I'm going to do it. And you do it because you need to build confidence in your trades. So yeah, so you don't feel like you're that confident about it. You don't want to be that strong about it. So take a smaller size, and over time you'll end up building your confidence, building your strength on using these strategies. So like many other strategies out there, Fibonacci's are just another tool. The simplicity of it is, well, it's a measured move. The real simplicity of it is, it's me taking a breath. It's me relaxing. It's me consolidating before that next move. So the next time you see a pullback on a chart, and the chart is obviously in a certain direction, if you're long, if your chart is pointing to the upside, you're trending up. Don't try to short it. Don't try to force it to do something it's not doing. If your chart is trending to the upside, say, hey, maybe I'll get this pullback on it and I'll play it long. And then you get the pullback on it and you don't play it long because you never trusted that pullback in the first place. But if your trend is working to one side, Try to learn to trust it a little bit. And instead of playing it on the short side when the chart starts to come down, as long as it's holding the main trend, take it on the long side and trust that work to keep you in. And sometimes if you're playing that pullback, it's actually closer to a stop than you think. Because if you're playing a pullback into a support trend, right under that trend is obviously your stop. And so you kind of have a good risk reward if you're playing a pullback move, because if the pullback doesn't hold, then the trend is broken. If the trend is broken, then your reasoning for staying in the trade have been negated. If your reasoning for staying in a trade have been negated, then you're stopped and you're done with it. And you can flip it and be short, because now it gives you another reason to take it short. So always be open-minded. Let some of your charts work for you. Let some of your fibs come into play a little bit. Remember, fibs are nothing more than just a pullback, a healthy thing. You're always a trend trader, and a trend trader understands that each chart needs to breathe before it makes another move to the upside. So that's going to be it for tonight's webinar. I do hope that some of this stuff was useful to those of you guys that checked it out. And I'm going to be doing this every other Wednesday. For those of you guys that are not trading with me on a daily basis, you probably should. Especially if you find any of this stuff interesting, check out the website at icemantradingacademy.com. And we're obviously growing, and we would love to have you trading with us.